In the quiet corridors of Washington, D.C., far from the public eye, a new kind of power emerged. It was 1987. The Cold War was ending, but a few insiders saw opportunity. They founded the Carlyle Group, named after the discreet Carlyle Hotel in New York, a fitting symbol for their ambitions. The founders weren't typical Wall Street types. David Rubenstein, a Carter advisor, and MCI executives William Conway Jr. and Daniel Daniello understood that real currency was access and information. Their vision, a private equity firm at the intersection of global capital and government policy, where fortunes could be made by anticipating and influencing the moves of nations. Their strategy was simple: leverage government connections to unlock value in industries shaped by policy, defense, telecom, aerospace. While others chased market trends, Carlyle chased political currents, betting on the direction of history itself. This model quickly attracted powerful names and fueled meteoric growth. From humble beginnings, Carlyle began acquiring companies, especially in defense, as the world entered a new era of uncertainty. By the millennium, Carlyle was a global titan, managing billions. Its portfolio thrived on government spending and instability, shaped by the very people on its payroll. The shadow power had arrived. To open doors closed to others, Carlyle made a bold move. It recruited former world leaders. The most prominent was George H.W. Bush, the 41st president and former CIA director who became a senior advisor to Carlyle's Asia board. His name and network gave Carlyle instant credibility and access worldwide. When Bush requested a meeting, doors opened, princes, prime ministers, and potentates listened. Carlyle became more than an investment firm. It was a quasi-sovereign entity with access governments envied. Bush's legendary trips to Saudi Arabia deepened Carlyle's ties to the kingdom's oil wealth. He was joined by James Baker III, former Secretary of State and Treasury, who brought his negotiating skills and global Rolodex. Baker's involvement cemented Carlyle's reputation as the ultimate insiders club. The firm also recruited former British Prime Minister John Major and Philippine President Fidel Ramos. Carlyle became a government in exile, a shadow cabinet of global power. Their collective influence was staggering. They could anticipate policy shifts because they had spent their lives creating them. They didn't just follow the news, they were the news. This transformation made Carlyle a firm run by those who shaped the modern world. Their access and expertise became a priceless asset. Beyond presidents and prime ministers, Carlyle's true engine was its inner circle. At the center, Frank Carlucci, former Secretary of Defense, National Security Advisor, and CIA Deputy Director. As Carlyle's chairman, Carlucci bridged the Pentagon and private profit, knowing which defense programs would thrive. His strategy: acquire undervalued defense companies, betting that global instability would keep military spending high. Under Carlucci, Carlyle bought United Defense, maker of the Bradley fighting vehicle, a move that paid off spectacularly. James Baker III, master of global finance and diplomacy, opened doors in the Middle East, leveraging personal relationships with ruling families. This inner circle created a self-reinforcing ecosystem. Politicians brought access, financiers brought capital, defense experts brought industry knowledge. Together, they formed a nearly impenetrable network, influencing government decisions through expertise and connections. They weren't just playing the game, they'd written the rules. Carlucci and Baker personified Carlyle's strategy, turning public service into private fortune. Their revolving door between Washington and Wall Street spun faster and more profitably than ever before. They could see over the horizon. They could influence government decisions not through illegal means but through the sheer weight of their expertise and connections. The shadow power had arrived. Carlyle mastered the business of monetizing conflict, investing heavily in defense and aerospace. Under Carlucci, they became a major player, understanding that defense spending remains constant in a world of instability. Their acquisition of United Defense, maker of the Crusader artillery and Bradley fighting vehicle, was a textbook move. Carlyle lobbied to keep the Crusader program alive, knowing government contracts meant long-term revenue. Every international crisis became a potential windfall. Their portfolio spanned the entire supply chain of war electronics, satellites, logistics, and more. This diversification insulated them from the risks of any single program being canceled. Critics argue Carlyle's profits are tied to policies that promote conflict. With former defense officials on board, the line between predicting and promoting war blurs. Carlyle's defenders say they're savvy investors. Critics see a firm with a vested interest in a militarized world. They are not just passive investors, they are active participants, shaping the very environment from which they profit. Carlyle wasn't just investing in weapons. They were investing in the future of war itself. Their influence reached deep into the machinery of modern conflict. The profits followed. Carlyle's reach extended beyond war. They targeted energy and infrastructure, the arteries of the global economy. Massive investments in oil, gas, pipelines, and refineries gave them a stake in the world's most volatile regions. With Bush and Baker, they navigated Middle Eastern politics with ease. Their political connections secured permits, navigated regulations, and built relationships with state-owned energy giants. Carlyle also moved into airports, seaports, and telecoms, critical infrastructure requiring government approval. After 9/11, Homeland Security became a booming industry, and Carlyle was perfectly positioned to profit. They owned companies providing security, screening, and data analysis. Carlyle's model was cyclical, profiting from war, the resources wars are fought over, and the rebuilding that follows. Whether in peace or chaos, Carlyle found a way to benefit. Their strategy was as brilliant as it was unsettling. They were at the nexus of global power and capital. The firm's influence shaped the conversation on energy security and infrastructure. Carlyle's grip was everywhere. Carlyle's ties to Saudi Arabia are its most controversial chapter. Early on, the Saudi royal family and associates became key backers, their capital fueling Carlyle's growth. George H.W. Bush's personal relationship with the monarchy deepened these ties. Among the Saudi investors, the bin Laden family, wealthy, influential, and for a time, investors in a Carlyle fund. This was before 9/11 and the family had publicly disowned Osama. Still, the optics were troubling. A firm stacked with former U.S. officials doing business with the family of America's future enemy number one. Carlyle insists the investments were legal and the bin Ladens divested after 9/11. But the connection lingers. This tangled web highlights the conflicts at the heart of Carlyle's business. The firm profited from relationships with a kingdom scrutinized for fostering extremism. The paradox: Carlyle would profit from the war on terror, while being linked, however distantly, to the family of its instigator. Power, money, and uncomfortable alliances define the Carlyle story. On September 11, 2001, as tragedy struck, Carlyle was holding an investor conference in Washington, D.C. Among the attendees, Shafiq bin Laden, half-brother of Osama, and Frank Carlucci. The attacks ended the meeting, but the story didn't end there. Defense stocks soared as investors predicted a surge in military spending. Carlyle, with major holdings in defense, saw its investments skyrocket. Their bet on a more dangerous world paid off in the most tragic way. United Defense, maker of the Bradley fighting vehicle, became a star asset. Carlyle took it public, reaping massive profits. No one at Carlyle wished for tragedy, but their business model thrived on instability. The war on terror became a financial windfall. A day of national mourning became for Carlyle a day of unprecedented opportunity. President Eisenhower warned of the military-industrial complex where profit and policy become dangerously intertwined. Carlyle is the 21st century embodiment of that warning. Former defense secretaries and presidents invest in defense companies, lobby for policies, and profit when spending rises. The revolving door between government and Carlyle spins fast. Public service and private gain blur. Critics see a profound conflict of interest. How can former officials give impartial advice when their wealth is tied to war? Carlyle operates in the gray area between what's legal and what's right. They've perfected the art of leveraging public service for private gain. The military-industrial complex Eisenhower feared is now global, privatized, and more powerful than ever. Carlyle is its personification. With over $400 billion under management, Carlyle's influence is vast, yet it remains largely invisible. This is by design. As a private equity firm, it's accountable only to its investors, not the public. Its secrecy is a core business asset, allowing it to operate out of the media spotlight. The complexity of private equity and global finance keeps most people in the dark. Carlyle's power is subtle, a network of shared calls, insider tips, and elite connections. This influence leaves few fingerprints embedded in the fabric of Washington and Wall Street. It's normalized, hidden in plain sight. As long as Carlyle remains in the shadows, its invisible hand will continue shaping our world. The true extent of its power may never be fully understood. That is the legacy and the warning of the Carlyle Group.